As a citizen of Hong Kong, I often find myself visiting the motherland, and one thing I've noticed recently is just how many electric vehicles there are on the road. So the Chinese electric vehicle industry has absolutely exploded, in part due to the fact there's over 400 EV companies in China producing Chinese EVs. Now, of those, we happen to believe that BYD is the most compelling Chinese EV stock, and today we want to take a look at another Chinese EV firm called Zeekr and try to figure out if they're a better investment than BYD. So the Chinese EV thesis is really three-pronged. First, you have the country of China. If you haven't been recently to the second largest economy in the world, then you ought to check it out because it's mind-blowing how far the Chinese have progressed. They're no longer copycats. They're leading, and they stand to lead in the automotive sector. They've now surpassed Japan as the largest exporter of automobiles. Mr. Elon Musk said that if there was a threat to Tesla, it's coming from China. Electric vehicles, were quite bullish on these. We were previously apprehensive about their growth. And that was based on total cost of ownership. So they'll never scale unless they can be cheaper than petrol-powered vehicles, and our belief is that, at least in the case of those being produced by BYD, they are. So the IPO, it's the biggest U.S. IPO by a China-based company since 2021, and Zeekr has sold 21 million American depository shares for $21 apiece. They're going to raise about $441 million. That's versus the $1 billion they had hoped for. And of that, in the F1 filing, there's indicated interest of $349 million. So we don't know if that's just indicated or actual, but it's said that Mobileye wanted to pony up $10 million of that. $320 million would come from Geely Auto, which is rather odd because they're the largest shareholder anyway. And you have $19 million from Cattle, so they're a battery producer. Per CNBC, they plan to use the proceeds from the offering to develop more advanced battery electric vehicle technologies. I think that would put their cash somewhere around $1 billion, just under that, perhaps. And they'll use this money for other things, obviously, burning it in their operations. Now, the showstopper for us is simply this. The first thing I did was go to their F1 and search for the acronym VI. It was nowhere to be found, but if you just look in the right places, you can see that this is structured to the same way as a VI structure. So it's, as they say in Eastern Asia, same, but different. The verbiage in the F1 is pretty straightforward. VI apparently is now a four-letter word, but the structure is still the same. It's a holding company incorporated in the Cayman Islands. They rely principally on dividends from the PRC subsidiaries for cash requirements. First paragraph of the F1, like the first thing they tell you, say we want to call your attention to the risk that investors in the ADSs are purchasing equity securities of Zeekr Intelligent Technology, a Cayman Islands holding company that conducts its operations through its subsidiaries. As a result, investors will not hold direct investments in the operating subsidiary. So you don't own shares in Zeekr, and you have no legal right to any aspect of said shares. That's a risk that you're going to need to take if you want to invest in Zeekr, and it's something that we wouldn't take on. Now, when we look at the company, they're selling a fair number of vehicles. So this chart from their F1 has made reference to there's really three models that they sell. These are two of them. The one on the left is rather slick. I've seen that one before on the streets of China at a decent price. The one on the right, the only problem with that is that somebody might see you driving that hideous contraption, but maybe it looks better in person, but the Chinese seem to like it. So when we look at the units here, and this is compared, you see some other familiar names there, NIO, BMW, Mercedes. When we look at the other vehicle that they're selling, it's a lower cost, lower average selling price that competes with Tesla. So this would be an SUV model priced between RMB 150,000 and 300,000. So this is selling for around 200, so that's 27,680 US dollars. when we look at the total number of cars that they sold in 2023, so this is provided in the F1, it's very handy. Hopefully they continue providing this to investors. We see they sold 118,685 cars last year, and of those, 64% were the Zeekr 001 and the Zeekr X at 17%, Zeekr 009 at 14%. So if you consider that number of cars and compare it to BYD's record 3 million annual sales in units that they had, BYD is selling about 25 times as many cars as Zeekr. So we'd be likely to stick with the global leader in electric vehicle production, BYD. They're in the global top 10 of car sales for the first time last year. So then, of course, there's Tesla. Now, over the course of 2023, Tesla sold 603,664 vehicles in China, again, compared to the 118,000 sold by Zeekr. And by the way, that was about 22.5% of Tesla's revenues in 2023. Interesting side note there. So before we get into talking more about Zeekr's sales, I wanted to use this as an opportunity to say thank you to our paying subscribers. So we have a lot of great people in our community now. If you're paying us money, you should be on our Discord server. If you're not, just reply to any email we send you and ask us for instructions on how to join. Our customers here at Nanalyze are the most important part of our business, and their feedback drives our product and content roadmap. We never take their patronage for granted. So if you're not a paying subscriber, certainly consider a subscription to support our work. By the way, we now have an affiliate program, so if you're someone who wants to work with us, drop us a line and you can make money by helping us sell subscriptions to our platform. So let's talk about Zeekr's vehicle sales. We'll use USD here. So they had $4.8 billion in vehicle sales in 2023 with a gross profit margin of around 15%. The table on the right, on the top there, that shows gross margins for Toyota, Tesla, and BYD. So that's about ballpark there. They're almost up with BYD's 16% gross profit margins. Of course, then they need to get to positive operating margins. They're not there yet. But when you look at Zeekr's total 2023 revenues of $7.3 billion and compare that to the $4.8 billion in vehicle sales, you have to wonder what else they're selling. Well, this table breaks that down, and as is typical for lots of these Chinese firms, they'll provide the numbers in renminbi, and then they'll provide alongside the latest year the U.S. equivalent, so you can see that here, and that's all broken down. Now, when we look at the segments, so Zeekr's vehicle sales, Viridi, that's the battery segment, and CEVT, that's the R&D development services. You can see there's distinctly different gross margins here. So we're calculating 16% gross margin on vehicle sales and a 5% margin on their battery sales, and that's a blended 13% gross margin. That doesn't give them a ton of leeway. So look here, this is in renminbi, but numbers don't really matter. You can always divide by 7, and that brings you close to US dollars. So they had total gross profit of about $1 billion. That is then X'd away by selling general and administrative, so that's gone. Then on top of that, you have this over $1 billion they're spending on R&D. So to get from their current gross profit to actually having a profitable business, so having a positive operating margin, they have a long way to go, and that's all about scaling their business, right? So they plan to, I think, close to double their car sales this year. So if that happens, that'll bring them closer to profitability. And they're certainly, as we said, raising some money from this IPO. Now, when you look at what they say their competitive advantages are, so of course, they're an innovative automotive technology company with a strong product offering, and indeed, when you look at all the functionality that's in their cars, that appears to be the case, at least in respect to autonomy and things like that. They have fast growth and success, indeed, empowered by significant advantages inherited from Geely Group. So that umbrella they sit under can certainly provide them with a lot of benefits. They talk about dedication to delivering superior user experience and creating user community. So this is something I noted when I was over there visiting with NIO and looking at their clubhouses, and I certainly don't find that sort of thing very appealing, but the Chinese seem to like that. So if you're somebody who purchased a NIO vehicle, you can go and visit the clubhouse, and there's all sorts of amenities there. And they like to promote that sort of thing. Advanced technology and R&D capabilities, going back to that, over $1 billion they're spending every year on R&D to keep ahead of the other 400 automotive technology companies in China. And they talk about strategic partnerships with global industry leaders and firms like CATL and Mobileye, which they plan to debut some technology, I think in 2024. They say the first level 4 ADAS with Mobileye. Now, when it comes to valuing Zeekr, so at $21 a share, and it will have begun trading when you watch this video. So this is a price that the IPO was going out at. What it begins trading at is a different story. But we use a simple valuation ratio that's market cap divided by annualized revenues. Here you can see that's 0.55 for Zeekr. That's very low. So our catalog average is somewhere around 6.5. And this would be considered very low. And what's interesting is when you go down the list here, and I pulled up some other names, Li Auto, NIO, Xpeng, you see that those all sit around 1. So it wouldn't be unreasonable to think that Zeekr could trade up from that price. And the fact that all these firms trade in roughly the same range certainly tells us something. Now, just some other bits and bobs I came across in the F1. So as I said, they're going to be the first, or are the first, to deploy Mobileye IQ5H chipset on electric vehicles in China. And they plan to work with Mobileye to jointly launch the world's first Level 4 autonomous driving capabilities for consumers in 2024. That ought to be interesting, especially in light of Mr. Musk going over there and having a chat with the Chinese about autonomy. So they have plans to expand in Europe and LATAM this year, and they say they're already selling vehicles in Sweden and the Netherlands. And as I said, they're targeting 230,000 EV deliveries for the full year, roughly double the 2023 tally. So when we consider BYD versus Zeekr, Zeekr is targeting the premium EV market. That's said to grow faster than other price categories. They're going to enjoy the benefits of the Geely umbrella. But then you have BYD, the world's largest producer of EVs, over 3 million vehicles in 2023. Zeekr did about 5% of that. So firms like BYD and Tesla are more able to compete on price, and that's not just because they have stronger gross margins, at least in the case of Tesla they do. It's because that they can enjoy economies of scale and the luxury of a wide range of products that they can competitively price on. Now, we don't see that Zeekr provides a better opportunity than BYD to play the Chinese EV thesis, but best of luck for those dabbling in today's IPO. Now, I'm going to put up one of a 2-part series we did on NIO. This is when I was over in Shanghai. I think it was the year before last, and it's rather interesting, so give that a watch. Please make sure to subscribe to our channel and support our work. Thanks so much for taking the time to watch this today.